So everybody who comes into trading expects their trading to be as easy as 1, 2, 3, ABC. But as you probably have realized, in the month of March, it's been very, very difficult. And I just want to bring your attention to an approach in trading that's really developed my results and turned things around for the better. Now, I'm going to share with you some concepts and principles today that you can start applying in your own trading. And I really do believe that this is going to make a huge difference to your success moving forward. Now, we can see a trade in front of us. This is what everybody expects the market to do. You know, create lower lows and lower highs, eventually break structure, pull back, create the bearish engulfing candles that you all read about on baby pips or books that you may pick up when you start trading, and then you just go for your targets and just hit take profit. Now, we know this is not the case, and really if it was as easy as this, then everybody will be trading in this style. So I want to share with you just some thought processes that you can apply to your own trading moving forward that will not necessarily give you a 100% win rate, but it will definitely increase your win rate moving forward, because more of your trades will be focused on the process and the story that the candles are telling you, as opposed to you just guessing and wanting to take a trade. Now, as you can see here on Euro Yen, this is another perfect example of what most traders are looking for. They're looking for price to show signs that the trend is down, price is now depleting that downtrend, and then start seeing price breaking above structure here again, looking for those retests and those continuations. Now, it's all well and good because these patterns do develop on a daily basis. They repeat themselves on a weekly and monthly basis. And these trading opportunities are here for you to trade all year round. But obviously, if you're not patient enough and disciplined to wait for them, then you'll find yourself taking trades you shouldn't be taking that eventually then lead you to being in drawdown, blowing your accounts. So when these trades do then arise, you're not in a position to take them and make money. You're either clawing back money or you're starting a new account build where, you know, the process just continues to go around in circles. So let's take a look at some key concepts, 3 key concepts you need to be focusing on with your trading, and let's head into the lesson. So the most important factors to your trading, in my personal opinion, is these 3 things right here. Now, the first thing you need to be focusing on right here is your key levels. Now, I cannot stress this enough to every single one of you, but your key levels is the first sign that will indicate to you that price is either going to continue in the direction that it intends to go or you would like it to go, or it will give you the first signs of price telling you, I'm not going anywhere. Now, I've shared this with you before on this channel, and this I visualize as my brick wall. Why? Because the truth is, if price is not able to break structure in an uptrend and continue making higher highs and higher lows and starts to create wick rejections or bearish candles, then that's a sign that there's a depletion in bullish sentiment. But if price breaks above this structure, that price has failed to break for a very long period of time, then there's a very high chance price can continue pushing bullish. Now, if the markets come back to this key level and fails to break above off of the back of an uptrend, and then starts to show signs of wick rejections and bearish candles, then there's a very strong chance that there might be a reversal in play. Now, how do I identify the reversal? Well, this moves on to our next most important factor. When you're looking at reversals, there's 3 things you need to identify. Is price breaking above your brick wall to continue on to make high highs and higher lows? Is price reacting at this brick wall with indecision candles, wick rejections, and bearish candles if it's coming off the back of an uptrend? And is price starting to break below previous higher low levels in an uptrend to indicate that the bears are involved in the market? Combine these 2 factors together and you have a winning formula. But we need one more confluence. And the third most important factor is your candle formations. Bullish candles and bearish candles indicate to us volume and momentum. It identifies to us who is involved in the markets, who's in control. When we start to link these to our trends or to our key levels, we can start to identify continuations and we can start to identify potential reversals. If you link these two candle formations with wick rejections, then this will now start to give you a broader picture and give you an opportunity to start planning your trades. Wick rejections identify to each one of us as traders that price is failing to continue in one direction or the other. Meaning that if there's a bearish wick, it means that more often than not, bulls have attempted to push the market up and failed. If there's a bullish wick, then that more often than not will tell us that the bears failed to push the market down and the bulls are stepping in. Link these three important factors together and you have a winning formula. So let's move on to our 3 examples and let's put these most important factors together. The first example here is on USD JPY. Now we're on the 1 hour time frame. Please remember those 3 most important factors. We have here an example of a downtrend. Price is creating lower highs and lower lows, lower highs and lower lows. Now, price has created a key level in the market where it's failing to break above for a very long period of time. Now we have a very strong sentiment of bulls stepping into the market because for the first time in a long time, we have a trend line break. But notice when we got to this trend line, we rejected it. So we're not convinced yet that we can take a buy, neither are we convinced yet we can take a sell. Now, if we start linking the factors together, we can identify here a key level. We have a break above that key level, which is one of the important factors. Combine that with a strong bullish candle, which is the 3rd most important factor. Now, if we start to identify structure in this market, we can now see prices making higher highs and higher lows. We can't take a trade yet because we need the 3rd factor in play. The 3rd factor is to see these wick rejections. So we have the key level break, we have price creating the bullish candles, we have the wick rejections. Now this means that we have a compelling story to take this trade. You don't want to just jump into a trade because you think it's a good trade. You need to build the confluences and identify the reasons as to why you want to take this trade. The last factor we need to consider here is the reversal. We can see that price was in a downtrend for a very long period of time. During this time, price never broke a lower high and never broke major key levels in the market. This has happened. So now that we have all the reasons to take this trade, we'll now enter. Now I just want to say this because this is examples for you all to understand the principles and concepts. All the trades I'm going to take today will win, but it's good for you to see winning trades so that you are able to then take these concepts and principles and then apply them with the same kind of thought process. So there you have it, a winning trade. Let's move on to example number 2. Here you can see we have really strong bearish momentum. Then all of a sudden, price decided to start depleting. Depletion means that there's neither bulls or bears in the market. Looking at the candle formations, we see lots of wicks, we see lots of red and green candles, nothing to really go by here. Then we have our key levels where price is failing to break below for a long period of time and break above for a long period of time. Now, if you look at the behavior of these candles within this consolidation, look here, there's not much volume. Then eventually we had a strong bearish candle. Now let's start linking everything together. We can see here that there was a key level. So once price breaks this, there's an indication of a continuation. Once we have strong bearish candles in this formation, breaking the key level, there's a very strong sign to support bears are in the market. And then when we can see that price has attempted to push bullish and failed, leaving wick rejections behind and not breaking back into structure, there's very strong evidence that the bears are in control. Now we've built our confluences, it's time for us to take this trade. Now again, all the examples I'm going to share with you will win, but I want you to really focus on the principles and concepts that I'm trying to share with you here. This, in the live markets, would more than likely be a sell stop entry, meaning that the only time that will be triggered into this trade is when price passes through this level here. This is what we call a sell stop. As you can see, price continued to push down really nicely. Now this trade didn't just go down because I guessed that it went down or because I cherry picked a great winning trade. Understand the most important factors we've spoken about, bring them together, line them up, and then take your trade. Let's look at our third and final example. Let's take a look at our third and final example. Here we can see on Euro USD on the 4-hour time frame, the trend was trending down for a period of time. Thinking about our most important factors, we have a key level here in the market where price is failing to make a new lower low. Looking at our second most important factor, we can also see there's a reversal in play because price is now breaking the trend line, it's failing to make a new low, and it's now starting to break above key levels. We have strong bullish momentum in the markets with a very strong close above structure levels. Moving on to our third and final most important factor, we have our wick rejections. Bring everything together, we now have confidence to take this trade. Now again, this example will win because I've made sure that I've picked winning examples so that you can focus on the thought process and see how this really plays out. Now, moving forward, when you start trading yourself, you have to understand that not every trade you take will win, but if you start applying these thought processes the way that I've helped you or highlighted today, then you will see a major difference. But please, never forget these most important factors. Your key levels, your break below key levels, and failures to break above key levels. Your bullish and bearish candles alongside your wick rejections. I hope you really enjoyed this, and if you did, just do me a big favor and smash that like button, subscribe if you haven't, and turn on notifications. Until next time.